Welcome to Decentralized News. Thanks for coming here for your weekly update of Bitcoin, cryptocurrency. Get all the news in a half hour. This is not financial advice. Please do your own research. We're here for educational entertainment purposes only. On today's show, we're going to cover Bitcoin halving that's coming up, ETF update on inflows, outflows, and what's going on with that. We're sitting here, today? 70,000, almost 71,000 Bitcoin pumping this Monday morning. Then we're going to get into ETH.
Never a bad thing. Never a bad thing when it pumps like this.
No, it's not. No, it is not. But yeah, so what's going on? Why did it shake out last week? Why is it pumping today? A couple of big ETH stories. So we'll get into ETH. That might be the next big narrative. ETF, all that stuff that might be coming up. Potential problem with Mac security, Mac devices on their M chip. So we'll discuss that a little bit. We'll touch on macro. We had a Fed meeting, and then we've got when they're going to pivot. It's a big story. It affects the cryptoverse, so we'll touch on that. And then we'll do an altcoin speed run. There's always a ton of news out there, but there's some good ones, including getting rugged by Starbucks, but we'll get into that. So first up, we'll get into Bitcoin, and we got a halving coming in 4 weeks. You excited about it, Ozzy?
Oh, I'm very excited about the halving. I think the halving is going to be quite the event for everybody, and I think Bitcoin's going to do something, and I think alts are going to have quite a field day too. So I'm pretty excited for the halving, that's for sure.
The estimates are between kind of 419 and 423, depending on the halving clock. And why is that not a set date? Is because it has to do with the amount of blocks, and that can be affected by hash rate and the mining difficulty. But at the 840th block, we are going to get a halving. We're going from 6.25 to 3.125. The first halving, we went from 50. So from the Genesis block until the 210,000th block, it was 50 Bitcoins, and we went down to 25. So big jump. And then we went from 25 to 12.5. Then we went from 12.5 to 6.25. So about every 4 years, for the past 4 years, we were at 6.25 per block. That's basically the inflation rate of Bitcoin. And now we're going down to 3.125. So each time it cuts in half, it's a little bit less of an impact, right? Like the percentage wise, going from 50 to 25 is not as big of a deal as from
going from 50 to 25 is a much bigger deal than going from 6.25 to 3.125. It's definitely a much bigger deal.
Yeah, it's like the difference from 50. So imagine the difference from 50. So 25 from 50 as opposed to how much further is going from 56 to 3. It's just not as much of an impact. But anyway, it's an interesting number because people are pointing to that this is officially lower than the inflation rate of gold. Have you heard that one?
I hadn't heard that, but it makes
a little bit higher inflation rate. Some people have talked about Bitcoin, store value, is it better than gold? A lot of people, including myself, would argue yes. But now our inflation rate will be officially lower than gold, although it's a bit mysterious what it can be.
That's a big story right there. Bitcoin's gonna have a lower inflation rate than gold. And I think that's also super interesting because it's still 23 to 28 days away. So do we still get that correction before that bigger 20 to 30% correction before the halving? Or do we not see that? There's Bitcoin dominance. It's been doing interesting things.
It's steady grinding up pretty much since it bottomed out. Bitcoin dominance is a really interesting number, especially when you start pricing everything in Bitcoin. You know what I mean? Like, how are you doing in your Bitcoin? But it went all the way down to about 36%. Obviously, when the cryptoverse was born, it started at 100% because it was the only coin. And then when we hit this bear market, it dropped all the way down to 36, I think is as low as it got. And we've just been grinding up. There's on the monthly candles, it's been steady up for months and months now, but not quickly. But we're all the way up to 53% right now. So interesting to watch. Eventually that's going to stop, and we're going to officially get
altcoin season.
Yeah. And a lot of people are looking at the Fed pivot for that as well. Like, that will be a sign of when altcoins can really take off, is when we're going to looser monetary policy. That's another reason why we watch.
It would make sense. It would make sense for that to happen. And the other thing about Bitcoin dominance is it also takes into account Tether or stablecoins. And so the fact that it's at 53% means there's most cash in the system is either in, like, at least half of the cash that's in the system is in Bitcoin right now. means there's not a lot of
And
cash
with
positions.
the halving coming up, there is potential to see that have one more push up as we head into the halving, and we waiting for the Fed to pivot still for probably one or two more meetings at least. We're a month away from the halving. There'll be some excitement. It'll probably be the main narrative going into this month.
Yeah, I think it'll be a strong narrative for the push up, especially because mining difficulty has been hitting all-time highs, and miners are gearing up for the halving as well. So we've seen Bitcoin hash rate hit about 6 exoterahash. So that's an all-time high. Mining's always been on a steady incline, but it's really taken off, I would say, in the last year and a half. Looking, other than some small downturns in mid 2021 and in April 2022, generally around times when China cracked down on Bitcoin mining, we've now seen a pretty exponential curve in terms of growth in mining difficulty. So that'll be interesting to watch, especially as we look at the ETFs a little bit. I think the ETFs and their behavior in terms of outflows or inflows will also be pretty severely impacted by the halving, don't you think?
Yeah, and it's been the main driver of the Bitcoin price really for, I don't know, since this thing launched, was like 10 weeks ago. We're 3 months into this now, right around there. And we finally it was really getting hyped up. We hit all-time highs. We pushed into 70,000. People really loving that. But we finally saw some consistent days last week where the outflows were beating the inflows. And that seemed to really affect the price, diluted a little bit, dropped all the way down to like low 60s, 61. I mean, recovered to like 64, kind of stayed there for the weekend, and then boom, Monday morning. I don't know what it is about Mondays, but it tends to have some action on Monday mornings, it seems like. So the markets are back strong. When the Asian markets open, boom, Bitcoin was jumping.
Yeah, it definitely took over. Like over the weekend, Sunday started to show some green, but we also had some pretty interesting flip flopping when we go look at the macro a little bit later on. Looking at some of those inflows and outflows, we had some major outflows out of Grayscale again last week, and even BlackRock had some outflows on Thursday.
Oh, really?
Yeah. Oh. There was some small
some
outflows.
Trading going on over there with IBIT, huh?
Yeah. Oh yeah. There was definitely some outflows there as well. So that was pretty interesting. Grayscale still holds roughly about 350,000 Bitcoin, which is worth.
And that's down from there. They originally had like a little over 600 or something.
I think it was like 640,000, somewhere around there. Yeah, we're at about the 50% mark for what they had, and I think at least the rumor is that they might drop another 40% from here, from where they were. From where they are now. I thought it was
40% overall, so down to like 200. That was.
I don't know. I've seen different talk there. They've been selling roughly about 4,140 or 50 Bitcoin a day over the last 2 weeks, which would mean a pace of about 85 days to go to zero, but no one thinks that'll actually go to zero. And BlackRock and the IBIT hold about 208,500 Bitcoin, and they've been seeing an average inflow of about 274 million, or about 4,120 Bitcoin. So there's about a 20 Bitcoin difference between the outflows from Grayscale and the inflows into BlackRock. And so considering that there are other ETFs, that 20 Bitcoin's been more than accounted for most days. However, last week we saw several days where the outflows were greater than inflows. If we look from the 18th through the 22nd, there was some net outflows of anywhere from about 50 Bitcoin to 325 Bitcoin from all of the ETFs. So that's something to watch for sure.
Yeah, it's interesting to look at that in terms of the 4,000 number. So you're getting about the same amount on average coming out of GPTC and as coming in with BlackRock. And there's 10 ETFs. So let's assume, just for fun, that keeps up. We're staying around 4,000, and that this GBTC selling dries up. Let's say it's about 40%, just to pick a number, down from their original amount. That gives us about, it was 85 days. It's about a third of that. So 20.
20 days, roughly. 24 days, I'd say.
So about the time of the halving. So interesting, the timing there, where it would dry up that selling. So imagine, one, your inflation gets cut in half, and two, your buy pressure of that 4,000 BTC a day, which is essentially, what is it at now? The total BTC a day, I think it's like around 9,000 or 10,000, right around there.
Oh, it's
And
less
it's going to
than
get cut
that.
in half.
It's less.
Oh.
It's even less than that, because think about this: you're generating, so it's about a block every 10 minutes, 6.25 coin per block. So 6 times 6, so that's about 38 and a half Bitcoin an hour times 24. If you've got a calculator, that's too large of a number for me to do the multiplication on. It's greater than 250, but it's definitely below
116. Yeah, I thought I saw 900 somewhere. So we're going to 400. It's around 850, 900, and that going down to 400.
Yeah. See,
and you're talking 4,000 a day, 10 times. Yeah, what?
Yeah,
something's
got to give. But I think this is the thing. When we look at that 4,000 number, the outflows since they're almost equal to what's going into BlackRock, it's just Grayscale users moving to BlackRock.
So with those outflows, the inflows could go down as well. That's a good point.
That, like, if you were to take GBTC outflows, subtract them from the total daily inflows and all of the other ETFs, that would give you a better that would give you a better idea of what's actually flowing.
Yeah, I think that's a good point.
And I think if you look, the numbers are roughly somewhere around the 100 Bitcoin a day, between 125 and 300 to 400 Bitcoin a day. If you look at it on rough math, not perfectly, but that gives you an idea.
Yeah, that's good. There was also some excitement about, where did I see this? Hang on just a second. Senior BTF. Oh, let's move on to the other one. I'll bring it up if I find it.
Yeah, let's look at ETH narratives. There's a lot of things going on with ETH. We're sorry that we didn't have a show last week, because we would have covered some of this, but March break and kid was home and I had a lot of things going on too. BlackRock is launching their build fund for digital yield in partnership with Coinbase, which is using Institutional Digital Liquidity Fund, which is the acronym, offer US dollar yields through tokenization. They're aiming to provide this to qualified investors with a stable token value pegged at a US dollar, with daily dividends, and marrying the stability of safe assets like US Treasury bills with the efficiency of blockchain tech. So reality, they're building a flat coin, or they're building a stable coin, really, because they're taking US Treasury bills, which is essentially what Tether does, although Tether is also buying Bitcoin and ETH, and offering it as a token, but they're only letting it be for basically institutional investors. So it's honestly, I've seen other stories and they've made it sound a lot more exciting than this, but looking at it, it's just, they're building a dollar, they're building a stable coin, but with dividends from treasury bills. So like a flat coin. And
yeah, so if you don't want to buy, it's just like the tokenization of US Treasury in a way.
Yeah. This is a lot less exciting than I thought it was. Like, it definitely sounded a lot more interesting when.
Well, the narrative is the BlackRock entering real world assets, building on Ethereum. It does involve Coinbase. If you're a Coinbase stockholder, more use case for them.
Yeah, Coinbase is very well positioned. They've got a lot of income sources now. Good for Coinbase, I think. They're definitely getting themselves up there. The other
this news seemed to have pumped the ETH price, but on the same day that this came out, there was some FUD about the SEC investigating ETH. Did you see that?
Yeah, I was gonna say this is the alternative news for ETH. So the dark side of ETH right now. They asked the Ethereum Foundation for a voluntary inquiry, which showed up on their GitHub repository. So
that's where this FUD originated from.
Yeah, that's the source of the FUD, and people are
lawsuits coming.
Yeah, some people were saying, is the SEC trying to figure out if ETH is a security and considering suing ETH? In my mind, that's not at all what's going on, but that this came to light last week at the same time and definitely got some people worried, especially about around ETHgate and the concern about the initial sale of Ethereum tokens. So
Yeah, the pre-sale,
and rumors that this pre-sale was structured in a way to like really benefit certain individuals and make it more like an investment contract. Although I've heard other people say that it's not, the sale wasn't as like an investment contract as a lot of people talk about it, or the people in that believe in ETHgate talk about. So interesting stuff. I really don't think that it has anything to do with it being a security.
But that comes down to the Howey test, right? Is there an expectation of profit?
Yeah, to get into the Howey test and everything, essentially everything, almost everything fails the Howey test. Like everything past would be defined as security, because if you look at Pokemon cards, like the classic story of Pokemon cards, there's Pokemon cards are collectibles now. I can sell you Pokemon cards saying, hey, they'll go up in value. You're buying that Pokemon card from me expecting it to increase in value.
Security.
Is that now a security? Are Pokemon cards now a security? To me, the Howey test isn't really proper, especially when you look at the other case law that we've had so far, like around XRP and some of the other stuff. Like it really has to be a direct relationship and like a promise of profit. And so it's a direct
relationship. The question for ETH and whether they're going to be a security or a commodity is just the fact that they switch from proof of work to proof of stake also seems to be lingering, as to things have changed since kind of their initial, what they initially thought about it, and now it may be a different scene, so they have to reevaluate it.
That's everyone that's proof of work maxis and Bitcoin maxis like other argument. And in my mind, it would have been easier to see that proof of stake argument if they went after Solana or Matic or someone else, like a smaller whale first, win that case, prove the proof of stake makes it a security, make that argument, and then go after Ethereum. But the fact that they're doing a voluntary inquiry means that the SEC isn't going after ETH. They're either looking for ETH's help in tracking down some other perpetrator that they believe that the ETH Foundation has some information on, or they're looking at information for the ETFs, because that's our next story. Fidelity added the ETH staking as part of their ETF. So that caused a nice skyrocket in Lido price of about 9% at the time, and could make an ETH ETF an even bigger blue chip than Bitcoin, because you now have a dividend or a passive income model under the ETF if it does get approved by the SEC. And so I'm of the opinion that they are probably looking for information around ETH staking and that security, and how maybe that inflation rate, the 4.2%, comes into play, so that yield and how guaranteed it is. I think that's probably where we're going at.
The bottom line is there was some smoke, so people are just speculating about what the fire is, but the bottom line is we don't know exactly. There's just some smoke, and there's just no way to know exactly what's going on there. But it did affect the odds, betting odds on the ETF. So May 23rd is this date, this final date for, I think it's one of the first ETFs. So the most important date in the spot ETF world. And the odds have really gone down lately. It was pretty high for a while. Now when this report came out, it got to as low as 17% on Polymart, which is just a betting site where you can bet on this. So it was as high as 82%, gone down to 17%, probably a little higher than that now. But beyond this FUD story, there was also, it has been pointed out and noted that there's not the same level of interaction as with the spot Bitcoin ETF between the SEC and the issuers. And I thought that was actually a more salient point.
It's a much more salient point. The level of interaction that we're seeing right now is more akin to previous.
There's like every other day there was updates right before the spot.
There's a little bit less applications for ETH, so that's one thing that we had to keep in mind. So comment periods are a little bit further apart, and so we're not seeing as much news on that. But I'm going to reiterate a stance that I've had essentially since we've started talking about the ETH ETFs. I don't think approval happens on May 23rd. I think it probably happens in the fall after a lawsuit of some kind. I don't know if it's ARK getting denied. I think it's ARK that's the next one up at bat, and maybe they get denied, or there's a disagreement about ETH staking or something else. And I think that is likely to be. So while I agree with the 17% of it being approved May 23rd, if there's the odds to bet if it gets approved in 2024, I think they're much higher. I think probably 60 or 70% on my end, at least.
It's called Polymarket. I've never been there, but you can go place your bet there, buddy.
Fair enough.
Well, it's still exciting, and I think the ETH narrative will just in general will heat up as soon as we get through the halving. I think it'll be all ETH and altcoins after that, especially if we see a pivot from the Fed and macro. But before we move on, though, there is an ETH Pectra upgrade, and it stood out to me because it says they're going from 32 ETH to validate, and now you have to have 2,048. And I thought, that's not fair. That's not good for decentralization. So we looked into it, but it's not quite that.
No, it's not quite that at all. It definitely gave me a scare when I saw the story too. But the big thing is they're increasing the maximum, not the minimum ETH required to stake. So it's still a minimum of 32, but it used to be that 32 was the min and the max.
Right, because only 32, yeah.
Now they're making it so that the maximum per validator is now 2,048 ETH. So if you've got a ton of ETH, you've got 2,000.
You had 3,000 ETH. You had to run 100 validators.
Yeah, you were running a ridiculous number of validators. Now you can run that all on one validator. I think if you're a validator, there's some risks there. Just because if you do get slashed in that one validator, you could lose all your ETH rather than getting slashed only percentage of your ETH. But that's neither here nor there. This does allow these larger validators with a lot of different validators like that are operating a ton of validators to potentially consolidate. They're right now are over
Coinbase.
Yeah, Coinbase, Lido, Rocket Pool, Swell, Eigenlayer. Like there's like about Binance. There's probably about a good 24 of them that are probably going to benefit from this experiment, and
maybe some of the retailers.
Yeah, exactly. So there's definitely some people. There's right now just shy of 1 million ETH validator stakes out there. There's potentially a larger number, quite a few people that could benefit from this, but it will definitely reduce that number of validators down quite a bit. I don't know exactly how much, but I wouldn't be surprised if we see a reduction to 400 or 500,000, maybe see it drop almost in half over the next once this upgrade goes out. And I think it'll also help shorten the queue. Right now there's a queue to join your validator, and sometimes it's gotten to a point where it was a couple months long, the queue. And so by increasing the amount of stakes, it should hopefully alleviate some of that, because you'll see those larger scale stakers be able to apply for one rather than apply for 10, for example, if they hit 320 ETH. So,
and I think it does help smaller stakers, right? Because if you have somewhere between 32 and 64, you couldn't really restake. You couldn't earn yield on that additional ETH that you would now be able to earn on. So I could see how this is good for smaller validators as well.
Yeah, I think it's overall a pretty beneficial move and could help in more ways than we imagine. So I think that's a very interesting news from ETH. And now you've got to talk about this because you brought this to my attention, but the Mac series, M series microchip vulnerabilities. This came up just today.
Okay, so there was like a research paper. They actually gave this to Macintosh. I forget exactly if it was 100 days ago or 50 days ago, but they've known about it. And they said, well, we're going to make this public in X amount of days, but they made it public. But there's new findings from academics revealed a severe vulnerability in Apple's M series chips, which could potentially enable malevolent actors the ability to access confidential encryption keys. Basically, they can steal your seed phrase. Maybe. The report was published on March 21st by a group of researchers from multiple United States-based universities. They identified the vulnerability as a side channel exploit, which allows hackers to illicitly obtain end-to-end encryption keys when Apple chips execute commonly used cryptographic protocols. So the researchers labeled this as the Go Fetch exploit. The hack functions seamlessly within the user environment and requires only standard user privileges. So not like it could potentially but there's a debate, right? So the Mac forums kind of were like, is this a major cause for concern? And it's not settled that it necessarily is. So waiting to see if there are any known cases of seed phrases being stolen in the wild. But it's worth mentioning just because Mac is considered kind of a little safer sometimes by some people, but they have their vulnerabilities too. And this might be an unpatchable flaw in the microchip. So not necessarily something they can just send out a quick software fix. So just be aware of it, be careful, maybe try to keep up on this story.
Yeah, and if you are one that potentially has been a victim of this hack, let us know. It'd be interesting to hear, and maybe a reason to maybe buy older Macs to use as burner computers for your crypto uses and not go towards the newer Macs. We're running tight on time, but let's get into some macro a little bit because I think it had a huge impact last week. Macro was a massive player.
Just the TLDR, we had a Fed meeting. They didn't change, but there were some dumbish comments. Really looking for the pivot. It's going to happen May 1st. Right now, not a lot of people expect it, but things could change because we have a couple of big reports coming out. We have PCE coming out, which is those inflation numbers, and then it's the unemployment numbers. If you take the Fed's comments about unemployment, plus if we see hot unemployment numbers, we could see the chances go up that we're going to pivot sooner rather than later. Right now, we're looking at June 12th as the likely time we're going to pivot, but May 1st is our next meeting. So, like I said, we got PCE and unemployment in between, and just some cracks in the Fed's armor based on his comments.
Yeah, so we had the Fed on Wednesday. It was a big hubbugaloo. Everyone who follows the macroeconomics was really interested to see what happened in this Fed. As we've talked about on the show for the last couple months, inflation data has been pretty hot. It's been above expectation for at least the last 2 months now, and especially on core, and that was concerning a lot of macroeconomists. And
like they're going to get a hawkish Fed, and it didn't happen.
Yeah, everyone was expecting a hawkish Fed, and Jerome Powell in his speech, they made the decision for no change. Everyone was expecting that, but Jerome Powell was essentially saying they kept their expectation for 3 cuts. He didn't say anything that really spurred hawkishness, and then on top of that, he went to the point of saying that the labor market was worrying him and that we could see a cut. That is something that they're watching closely. And so now he's even showing, hey, I've got data that says I might need to cut soon. Whereas before we were not talking about a cut. It was the market was predicting one, but we didn't have any kind of chink or sign from the Fed that they were looking that way.
Yeah, it seems like it was around the unemployment number that he was really focused.
Oh, absolutely. Labor and unemployment. I think both the JOLTS report and the unemployment numbers both kind of have caught his idea. The JOLTS report doesn't come out for a little bit, though.
And unemployment isn't until, not this Friday we get PCE, but it's not until next Friday we get the unemployment numbers. But that could have a big effect with the markets.
Oh, absolutely. Yeah. Looking at expectations a little bit, May is still right now expected at about 90% to stay the same, no change. June gets interesting. We're talking about a 70% chance of a cut in June, most likely quarter basis point. Some are calling for a half point, and then July is potential chance for another one. So we're looking at a summer of cuts heading into the fall and the election.
Speaking of cuts, and I've talked to you about how I think that might be a time when the real altcoin season kicks off is once we kind of pivot. Although there's always alts that outperform, and some alts have been doing good, but we're still seeing Bitcoin dominance creep up. So we'll see how that plays out. But let's get into the altcoin kind of speed run. There's a bunch of stories. I'll kick it off. Avalanche and Alipay have a collaboration. Alipay, which I never heard of until today, but it's China's largest payment app, so a big deal. So Alipay is launching a Web3-enabled voucher program on Avalanche. So big news for Avalanche.
Big news for Avalanche. Looking at PancakeSwap, they've announced P4 will be released. V4 will be released in Q3 of 2024, which includes hooks, custom pool types, gas optimization, and other upgrades. Big moves from PancakeSwap as they've deployed on more chains, including ZK Sync recently.
There was also a talk of a Tether competitor called Usual. When I read the announcement, there wasn't a lot of information, but they were saying the way they were describing themselves is that In the other stable coins, the profits have been privatized, and they're going to try to change that a little bit. So interesting to watch that. But then we also have some news. Have you seen FTM?
FTM's been going pretty crazy. A lot of traders are front running their Sonic upgrade, which is supposed to help increase transaction volume, at least as one of the features. So lots of people watching FTM.
And it's funny because FTM is like supposed to be super fast, but nobody uses it.
That's it.
It has been pumping lately, so it's interesting to see that though. But it's like they have a bunch of transactions first to need all this speed.
Exactly. So interesting. And then Ton, so Telegram. The Taunton Foundation has announced the launch of Open League, which is a rewards initiative valued at over 115 million. Telegram really seems to be killing it in the crypto game.
Then we got Base has been pumping lately. The meme coin season maybe came and went already on Base. I don't know, but bottom line is their TVL is at all-time highs. Another part of it is just the BlackRock narrative with their real-world asset narrative. But Base Chain has seen a lot of growth lately. Don't sleep on them.
Someone that I've been sleeping on, but other people don't seem to be. Dot is getting their first meme coin called Pink. Peep coin season, especially if Dot's involved.
If Dot's involved, maybe we're starting to get to an end of it. We'll see. Some people look at meme coin seasons as like the end of cycles, but who knows? What is it they say? Cycles rhyme. They're not exact. So we'll see how that works out.
And meme coins have been a standard almost for the last year and a half. So maybe they're here to stay.
Yeah, exactly. Arbitrum DAO has proposed a $400 million incentive for gaming. Now, they had some bad news in the sense that they had a big unlock, but they also had good news in that the decon upgrade seemed to really help with their fees. More good news at Arbitrum DAO. It looks like they have a proposal that is likely to pass for a $400 million incentive program for gaming.
That's pretty awesome.
And then the last little bit of news, the Starbucks Odyssey program has closed. I was going to check the exact date, but the Discord is gone already. I was a part of that. I used to work for Starbucks, so I was involved with that from the very beginning. It was in a beta. Looks like it's not coming out of beta. Might have to do with regulation worries in the United States. Don't know exactly, but they are closing the program.
You got rugged.
Yeah, sorry about that. So that's why I am not a financial advisor. And this is for educational and entertainment purposes only, because if you follow me, you're going to get rugged.
Don't forget, like and subscribe, share the content with a friend, and we'll see you guys next week. Thanks.
Bye.